Assalamu alaikum, welcome to my YouTube channel. In this video we are discuss about in a topic. This topic is how to budget when your income is not predictable. Running your own business or working a freelancer, you crash flow may have ups and downs, but you still need a budget. These financial planning tips will put you on the right path. If you are gig worker or otherwise self-employed, you may every envy your friends who are employed full-time when it comes to creating a budget. They typically know how much money they bring in and when it's coming. You do not, and you may think therefore that it's impossible for you to make a budget. But it's not, it's just more challenging, in fact, because your income and expenses are always fluc- fluctuating. Budgeting is even more critical for you than for your friend who get W2 statements. Financial experts do not agree on the optimal way to budget. Some suggest using percentage like the 50-30-20 rule. Others like the zero based budgeting method where your income minus expenses should always equal zero. There even a pay yourself first school of thought where you take out of money to work towards your saving goals and feed your emergency fund before you plan an expense. Regardless of whether you follow a money of management system, these 115 tips for budgeting help when you crash follow frequents and the estimate your income. Estimate your income. Rachel's Lawrence, head of advice and planning for Moonrach, one of the best personal finance apps and self-employed certified financial planner CFP, recommends estimating your income before you start trying to balance that with expenses. Lawrence has three suggestions. Estimate your income based on your financial history. Either collect bank statement from the last couple of years or use a personal finance app that lets you connect to online financial accounts and report cleared transactions. That way you can see all the transactions coming into all your accounts in one place. Take any seasonal spikes and dips into account. Estimate the minimum amount you are expecting. That the worst case scenario for workers in the gig economy. Lawrence says. Figure out of your target income. Even though your income might change every month, you can come up with a target income number, meaning the minimum amount you would like to earn to adequately cover your expenses. Lawrence recommends using these four categories to figure out of your expenses. Find expenses what you have to pay every month, such as rent or mortgage payment. Utilize insurance, subscriptions, and business expenses. Non-monthly expenses, annual or semi-annual financial commitments like car registrations and property taxes, or upcoming planned expenses like car repairs or a trip. Large future expenses can be broken into smaller monthly budget items. Flexible or variable expenses, things like groceries, gas, personal cares, and shopping, you can estimate here based on history or based on what you would like to be spending. Future expenses, the amount you want to use to pay down debit to or to set aside for saving and investments. Add up your four categories to get your target. Monthly income amount after taxes and business overhead. Budget for income taxes. You are required to pay quarterly estimated incomes tax to avoid penalties and an unmanageable tax bill come April. There are There's no easy way to estimate what your tax liability might be for the 3 months. With this, we end our video and see you in our next video. Thank you. Allah.